The dollar is continuing to hold firm this week, making small gains against the euro today and pushing the pair back towards some key support levels. Now, this is a pair that's risen quite considerably now over the course of the last few months. The euro has performed extremely well, but at the same time, the US dollar has had a difficult time of things. US yields dropping to these all-time lows in many cases. Real yields as well in the US, when account for inflation, also falling towards a kind of -1% region, has really dragged on the US dollar, so forced it to make losses against a whole host of currencies, one of which is the euro. Now, the euro is pulling back a little bit today, but it still has continued to remain strong. The German data this week only further encouraging signs, with the GDP number being revised slightly higher and confidence still improving. But then we are still now hitting a point in this currency pair where we may be seeing a little bit of profit taking. So while I do still believe the outlook for the dollar is looking a little bit troubling, given what we are seeing on the yield front, I think in the near term we could potentially see a bit of a correction in this currency pair. As you can see on the chart here, you can quite clearly see that momentum has started to lag over the course of the last few weeks. That's further supported by the indicators along the bottom, one being the MACD, where you can see even as price made higher highs going into that, closing in on that 120 region, the MACD was making a series of lower highs, and the same is true of the stochastic as well. Both these momentum indicators clearly highlighting a divergence with the price action. Now, that in itself doesn't necessarily mean we're going to see an immediate correction in the price. We do need further confirmation, but does just suggest that this rally is starting to run on fumes, and running on fumes just as we approach a key resistance level, key psychological resistance level around that 120 mark. We haven't hit it yet. We could still potentially hit that level, but it does look like some of the signs are showing that momentum is starting to lag and the dollar is starting to pick up a little bit of steam. But as I say, we need to see some confirmation. So the first would come from a break below the 117.50 region, which is the most recent low, ending the series of higher lows that we have been seeing. 117 just below that does seem to be more stable support. We've hit that a couple of times on the way up, and that has held firm. So 117.50 could be a bit of a red flag. 117, I think, would be a more clear signal that would end the series of higher lows that we have seen and potentially send us into correction territory. That could also coincide potentially with a break of 94 on the US dollar index as well, which would just be a further confirmatory point here. So I think that's the levels to keep an eye out for. Should we see a break of those, given the peaks that we've seen in the euro dollar pair more recently, that could potentially take us back towards the 114, 115 regions. I think that becomes the key focal point of interest as far as traders are concerned. And that obviously previously as well has been a major area of resistance for this currency pair. But again, that would only put us into correction territory here. That would only be a small corrective move in what has been a broader rally for this currency pair. So I think these are the signals to really keep an eye out for here. And ultimately, it all depends on whether we can see yields continue to push lower on the US side. Obviously, the next key event of note that we should be focusing on is going to be the Jackson Hole Symposium, a virtual symposium this year, which takes place on Thursday and Friday. Keynote speech coming from the Fed Chair, Jerome Powell. Recently, the markets have been disappointed by the Fed's refusal to adopt yield curve control, similar to what we have in Japan. And that seems to have been what's triggered the slight uptick that we've seen in yields. If Jerome Powell suggests that this is something that they are strongly considering and could be something that we are going to see, then that may be enough to push these yields lower. Otherwise, further commitments to long-term low interest rates, potentially more stimulus, these types of promises, that could also potentially push these yields lower, taking some of the heat out of the US dollar and avoiding that 117 break in the euro dollar pair.